Wells Fargo and Company is an American multinational banking and financial services holding company which is headquartered in San Francisco, California, with hubquarters throughout the country. It is the fourth largest bank in the U.S. by assets and the largest bank by market capitalization. Wells Fargo is the second largest bank in deposits, home mortgage servicing, and debit cards. In 2011, Wells Fargo was the 23rd largest company in the United States. In 2007 it was the only bank in the United States to be rated AAA by S&P, though its rating has since been lowered to AA in light of the financial crisis of 2007–2012. The firm's primary U.S. operating subsidiary is National Bank Wells Fargo Bank, N.A., which designates its main office as Sioux Falls, South Dakota. Wells Fargo in its present form is a result of a merger between San Francisco-based Wells Fargo and Company and Minneapolis-based Norist Corporation in 1998 and the subsequent 2008 acquisition of Charlotte-based Wachovia. Following the mergers, the company transferred its headquarters to Wells Fargo's headquarters in San Francisco and merged its operating subsidiary with Wells Fargo's operating subsidiary in Sioux Falls. Wells Fargo is one of the Big Four banks of the United States, along with J.P. Morgan Chase, Bank of America and Citigroup its main competitors. The company operates across 35 countries and has over 70 million customers globally. In 2012, it had more than 9,000 retail branches and over 12,000 automated teller machines in 39 states in the District of Columbia. As of July 12, 2013, Wells Fargo became the world's biggest bank by market capitalization, worth $236 billion, beating ICBC. In February 2014 Wells Fargo was named the world's most valuable bank brand for the second year running in the Banker and Brand Finance study of the top 500 banking brands. History. The current Wells Fargo is a result of a 1998 merger between Minneapolis-based Norist Corporation and the original Wells Fargo. Although Norist was the nominal survivor, the new company kept the Wells Fargo name to capitalize on the long history of the nationally recognized Wells Fargo name and its trademark Stagecoach. After the acquisition, the parent company kept its headquarters in San Francisco. The company's current tagline, "Together We'll Go Far," also references the Stagecoach motif, its customers, and represents the company name itself in a transposed way. In-store branches. There are many branches located inside of other buildings, which are almost exclusively grocery stores, that usually contain ATMs, basic teller services, and, space permitting, an office for private meetings with customers. Wachovia acquisition. On October 3, 2008, Wachovia agreed to be bought by Wells Fargo for about $14.8 billion in an all-stock transaction. This news came 4 days after the Federal Deposit Insurance Corporation made moves to have Citigroup buy Wachovia for $2.1 billion. Citigroup protested Wachovia's agreement to sell itself to Wells Fargo and threatened legal action over the matter. However, the deal with Wells Fargo overwhelmingly won shareholder approval since it valued Wachovia at about 7 times what Citigroup offered. To further ensure shareholder approval, Wachovia issued Wells Fargo with preferred stock holding 39.9% of the voting power in the company. On October 4, 2008, a New York state judge issued a temporary injunction blocking the transaction from going forward while the situation was sorted out. Citigroup alleged that they had an exclusivity agreement with Wachovia that barred Wachovia from negotiating with other potential buyers. The injunction was overturned late in the evening on October 5, 2008, by the New York State Appeals Court. Citigroup and Wells Fargo then entered into negotiations brokered by the FDIC to reach an amicable solution to the impasse. Those negotiations failed. Sources say that Citigroup was unwilling to take on more risk than the $42 billion that would have been the cap under the previous FDIC-backed deal. Citigroup did not block the merger, but indicated they would seek damages of $60 billion for breach of an alleged exclusivity agreement with Wachovia. Predecessors. Wells Fargo operates under Charter No. 1, the first national bank charter issued in the United States. This charter was issued to First National Bank of Philadelphia on June 20, 1863, by the Office of the Comptroller of the Currency. Traditionally, acquiring banks assume the earliest issued charter number. Thus, the first charter passed from First National Bank of Philadelphia to Wells Fargo through its 2008 acquisition of Wachovia, which in turn had inherited it through one of its many acquisitions. Selected predecessor companies: Crocker National Bank, First Interstate Bancorp, First National Bank of Philadelphia, First Security Corporation, Norist Corporation, Wachovia Corporation. 2008 financial crisis. On October 28, 2008, Wells Fargo was the recipient of $25 billion of the Emergency Economic Stabilization Act federal bailout in the form of a preferred stock purchase. Tests by the federal government revealed that Wells Fargo needs an additional $13.7 billion in order to remain well capitalized if the economy were to deteriorate further under stress test scenarios. On May 11, 2009, Wells Fargo announced an additional stock offering which was completed on May 13, 2009, raising $8.6 billion in capital. The remaining $4.9 billion in capital is planned to be raised through earnings. On December 23, 2009, Wells Fargo redeemed the $25 billion of Series D preferred stock issued to the U.S. Treasury under the Troubled Asset Relief Program Unregistered Trademark S Capital Purchase Program. As part of the redemption of the preferred stock, Wells Fargo also paid accrued dividends of $131.9 million, bringing the total dividends paid to the U.S. Treasury and U.S. taxpayers to $1.441 billion since the preferred stock was issued in October 2008. Environmental record: Wells Fargo ranked number 1 among banks and insurance companies and number 13 overall in Newsweek magazine Unregistered Trademark S inaugural OE Green Rankings of the County Unregistered Trademark S 500 largest companies. So far, Wells Fargo has provided more than $6 billion in financing for environmentally beneficial business opportunities, including supporting 185 commercial-scale solar photovoltaic projects and 27 utility-scale wind projects nationwide. As a member of the U.S. Environmental Protection Agency's Climate Leaders Program, Wells Fargo aims to reduce its absolute greenhouse gas emissions from its U.S. operations by 20% below 2008 levels by 2018. Wells Fargo has launched what it believes to be the first blog among its industry peers to report on its environmental stewardship and to solicit feedback and ideas from its stakeholders. We want to be as open and clear as possible about our environmental efforts both our accomplishments and challenges and share our experiences, ideas and thoughts as we work to integrate environmental responsibility into everything we do, said Mary Wenzel, Director of Environmental Affairs. We also want to hear and learn from our customers. By working together, we can do even more to protect and preserve natural resources for future generations. Key dates: 1852, Henry Wells and William G. Fargo, the two founders of American Express, form Wells Fargo and Company to provide express and banking services to California. 1860, Wells Fargo gains control of Butterfield Overland Mail Company, leading to operation of the western portion of the Pony Express. 1866, Grand Consolidation unites Wells Fargo, Holiday, and Overland Mail stage lines under the Wells Fargo name. 1905, Wells Fargo separates its banking and express operations. Wells Fargo's bank is merged with the Nevada National Bank to form the Wells Fargo Nevada National Bank. 1918, as a wartime measure, the U.S. government nationalizes Wells Fargo's express franchise into a federal agency known as the U.S. Railway Express Agency. The government takes control of the express company. The bank begins rebuilding but with a focus on commercial markets. After the war, AREA is privatized and continues service. 1923, Wells Fargo Nevada merges with the Union Trust Company to form the Wells Fargo Bank and Union Trust Company. 1929, Northwest Bank Corporation is formed as a banking association. 1954, Wells Fargo and Union Trust shortens its name to Wells Fargo Bank. 1960, Wells Fargo merges with American Trust Company to form the Wells Fargo Bank American Trust Company. 1962, Wells Fargo American Trust again shortens its name to Wells Fargo Bank. 1968, Wells Fargo converts to a federal banking charter, becoming Wells Fargo Bank, N.A. 1969, Wells Fargo and Company Holding Company is formed, with Wells Fargo Bank as its main subsidiary. 1982, Northwest Bancorporation acquires consumer finance firm Dial Finance, which is renamed Norest Financial Service the following year. 1983, Northwest Bancorporation is renamed Norest Corporation. 1983, largest U.S. bank heist to date takes place at a Wells Fargo depot in West Hartford, Connecticut. 1986, Wells Fargo acquires Crocker National Corporation from Midland Bank. 1987, Wells Fargo acquires the personal trust business of Bank of America. 1988, Wells Fargo acquires Barclays Bank of California from Barclays plc. 1995, Wells Fargo becomes the first major financial services firm to offer Internet banking. 1996, Wells Fargo acquires First Interstate Bancorp. 1998, Wells Fargo Bank merges with Norest Corporation of Minneapolis. 2000, Wells Fargo Bank acquires National Bank of Alaska. 2000, Wells Fargo acquires First Security Corporation. 2001, Wells Fargo acquires HD Vest Financial Services. 2007, Wells Fargo acquires CIT Construction. 2007, Wells Fargo acquires Placer Sierra Bank. 2007, Wells Fargo acquires Greater Bay Bancorp. 2008, Wells Fargo acquires United Bancorporation of Wyoming. 2008, Wells Fargo acquires Century Bank. 2008, Wells Fargo acquires Wachovia Corporation. 2009, Wells Fargo acquires North Coast Surety Insurance Services. 2012, Wells Fargo acquires Merlin Securities. 2012, Wells Fargo acquires stake in the Rock Creek Group LP, operations. Wells Fargo offers a range of financial services in over 80 different business lines. Wells Fargo delineates 3 different business segments when reporting results: community banking, wholesale banking, and wealth, brokerage and retirement. Community banking: the community banking segment includes regional banking, diversified products and the consumer deposits groups, as well as Wells Fargo Customer Connection. Wells Fargo also has around 2,000 standalone mortgage branches throughout the country. Wells Fargo Home Mortgage: Wells Fargo Home Mortgage is the largest retail mortgage lender in the United States, as of Q3 2011, originating 1 out of every 4 home loans. Wells Fargo services $1.8 trillion in home mortgages, the second largest servicing portfolio in the U.S. It was reported in 2012 Wells Fargo reached 30% market share for U.S. mortgages. However, CEO John Stumpf said the numbers are misleading because about half of that share represented the aggregation of smaller loans that were then sold on in the secondary market. Now, in 2013 its share is closer to 22%, of which 8 percentage points is aggregation. Wealth, brokerage, and retirement: Wells Fargo offers investment products through its subsidiaries, Wells Fargo Investments, LLC and Wells Fargo Advisors, LLC, as well as through national broker-dealer firms. Mutual funds are offered under the Wells Fargo Advantage Fund brand name. The company also serves high-net-worth individuals through its private bank and family wealth group. Wells Fargo Advisors is the brokerage subsidiary of Wells Fargo, located in St. Louis, Missouri. It is the third largest brokerage firm in the United States as of the third quarter of 2010 with $1.1 trillion retail client assets under management. Wells Fargo Advisors was known as Wachovia Securities until May 1, 2009, when it legally changed names following the Wells Fargo's acquisition of Wachovia Corporation. Internet services: Wells Fargo launched its personal computer banking service in 1989 and was the first bank to introduce access to banking accounts on the web in May 1995. Wholesale banking: the wholesale banking segment contains products sold to large and middle-market commercial companies, as well as to consumers on a wholesale basis. This includes lending, treasury management, mutual funds, asset-based lending, commercial real estate, corporate and institutional trust services, and capital markets and investment banking services through Wells Fargo Securities. One area that is very profitable to Wells Fargo, however, is asset-based lending, lending to large companies using accounts receivable and inventory as collateral, though less traditional assets are often included in the collateral package. Historically, this type of lending has been done when normal routes of raising funds, such as the capital markets or unsecured bank loans, have been exhausted. The main business unit associated with this activity is Wells Fargo Capital Finance. Wells Fargo also owns Eastdil Secured, which is described as a real estate investment bank, but is essentially one of the largest commercial real estate brokers for very large transactions. Wells Fargo Securities. Wells Fargo Securities is the investment banking division of Wells Fargo & Company. It is the ninth largest in the U.S. and exists today as an amalgamation of several legacy enterprises, most notably Wachovia Securities. The size and financial performance of the group is not disclosed publicly, but analysts believe the investment banking group houses approximately 4,500 employees and generates between $3 and $4 billion per year in investment banking revenue. By comparison, two of Wells Fargo Euro unregistered trademark's largest competitors, Bank of America and J.P. Morgan Chase, generate approximately $5.5 billion and $6 billion respectively. WFS headquarters is based in Charlotte, North Carolina, with other U.S. offices in New York, Boston, Houston, San Francisco, and Los Angeles, and international offices in London and Hong Kong. WFS history. Wells Fargo Securities was established in 2009 to house Wells Fargo Euro unregistered trademark's new capital markets group, which it obtained during the Wachovia acquisition. Prior to that point, Wells Fargo had little to no participation in investment banking activities, though Wachovia had a well-established investment banking practice which it operated under the Wachovia Securities banner. Wachovia's institutional capital markets and investment banking business arose from the merger of Wachovia and First Union. First Union had bought Bowles Halal Connor and Company on April 30, 1998, adding to its merger and acquisition, high-yield, leveraged finance, equity underwriting, private placement, loan syndication, risk management, and public finance capabilities. Legacy components of Wells Fargo Securities include Wachovia Securities, Bowles Halal Connor and Company, Barrington Associates, Halsey, Stewart and Company, Leopold Kahn and Company, Back and Company, and Prudential Securities. WFS most recently acquired the investment banking arm of Citadel LLC. WFS growth plans. In 2009, then Wells Fargo chairman Dick Kovacevic stated that he believed Wells Fargo Securities would be among the top 5 investment banks in the next few years. Regarding Wells Fargo Euro unregistered trademark's traditional aversion to complex institutional capital markets business lines, current CEO John Stumpf said that investment banking had changed a lot, that Wells Fargo now had fewer competitors and was a bigger company with more clients who need capital market access. According to Jonathan Weiss and Robert Engel, co-heads of investment banking and capital markets, the group intends to grow by 10% to 20% per year for the foreseeable future. Wells Fargo disclosed that investment banking revenue from underwriting and M&A advisory increased 44% in 2010 over the prior year. As of July 12, 2013, Wells Fargo became the world's biggest bank by market capitalization, worth $236 billion, ousting ICBC as world's biggest bank. Cross-selling. A key part of Wells Fargo's business strategy is cross-selling, the practice of encouraging existing customers to buy additional banking products. Customers inquiring about their checking account balance may be pitched mortgage deals, and mortgage holders may be pitched credit card offers in an attempt to increase the customer's profitability to the bank, and to make it more difficult for the customer to switch to a different bank. Other banks have attempted to emulate Wells Fargo's cross-selling practices. Forbes magazine describes Wells Fargo as better than anyone at the practice. International operations. Wells Fargo provides banking services throughout the world, with main offices in Hong Kong and London. Also, as announced in 2011, Wells Fargo Securities has planned an expansion of its investment banking practice internationally, adding positions to its existing offices in Asia, Europe, and Latin America. Wells Fargo has an office in the Middle East, in Dubai at Dubai Financial Center. Wells Fargo has a presence in India as well. Wells Fargo India Solutions is a wholly owned subsidiary of Wells Fargo. Small business loans. Wells Fargo gave over 1,900 small business administration loans from late 2012 to early 2013. Wells Fargo Private Student Loans. Wells Fargo Private Student Loans help students pay for eligible college expenses, such as tuition, books, computers, or housing. Loans are available for undergraduate, career and community colleges, graduate school, law school and medical school. Wells Fargo also provides private student loan consolidation and student loans for parents. Corporate affairs, historical data. Wells Fargo Bank was the fifth largest bank at the end of 2008 as an individual bank. Major shareholders. As of 2012, Berkshire Hathaway was the single largest shareholder, having a stake of 411 million shares. Contains 5,266,300,000 in outstanding stock. Controversies. On February 4, 2009, Wells Fargo announced it was canceling a 4-day business meeting and employee recognition event in Las Vegas. There had been negative allegations from the media, members of Congress and other public officials that the trip was a pricey Las Vegas casino junket, and that the company was misusing taxpayers' money, since Wells Fargo had been one of the banks that received bailout funds from the government a few months earlier. Illinois Attorney General Lisa Madigan filed suit against Wells Fargo on July 31, 2009, alleging that the bank steers African Americans and Latinos into high-cost subprime loans. A Wells Fargo spokesman responded that the policies, systems, and controls we have in place including in Illinois ensure race is not a factor. In a March 2010 agreement with federal prosecutors, Wells Fargo acknowledged that between 2004 and 2007 Watchovia had failed to monitor and report suspected money laundering by narcotics traffickers, including the cash used to buy 4 planes that shipped a total of 22 tons of cocaine into Mexico. In August 2010, Wells Fargo was fined by U.S. District Judge William Alsop for overdraft practices designed to gouge consumers and profiteer at their expense, and for misleading consumers about how the bank processed transactions and assessed overdraft fees. On April 5, 2012, a federal judge ordered Wells Fargo to pay $3.1 million in punitive damages over a single loan, one of the largest fines for a bank ever for mortgaging service misconduct. Elizabeth Magner, a federal bankruptcy judge in the Eastern District of Louisiana, cited the bank's behavior as highly reprehensible, stating that Wells Fargo has taken advantage of borrowers who rely on the bank's accurate calculations. She went on to add, perhaps more disturbing is Wells Fargo's refusal to voluntarily correct its errors. It prefers to rely on the ignorance of borrowers or their inability to fund a challenge to its demands, rather than voluntarily relinquish gains obtained through improper accounting methods. The fine has come at a time that the Department of Housing and Urban Development has launched an investigation of Wells Fargo into racial discrimination practices, the second federal probe in 2012 of alleged violations of misconduct with regard to race. The other, began in 2011 by the National Fair Housing Alliance, has found overwhelming and troubling evidence that 6 of the nation's major banks handle foreclosures in neighborhoods populated primarily by minorities differently from in white communities. On July 13, 2012, Wells Fargo entered a settlement agreement with the U.S. Department of Justice for allegedly discriminating against African American and Hispanic borrowers from 2004 to 2009. Wells Fargo will pay $125 million to subprime borrowers and $50 million in direct down payment assistance in certain areas, for a total of $175 million. Wells Fargo spokespersons denied all claims and are settling only to avoid contested litigation. On August 14, 2012, Wells Fargo agreed to pay around $6.5 million to settle SEC charges that in 2007 it sold risky mortgage-backed securities without fully realizing their dangers. On October 9, 2012, the U.S. federal government sued the bank under the False Claims Act at the federal court in Manhattan, New York. The suit alleges that Wells Fargo defrauded the Federal Housing Administration over the past 10 years, underwriting over 100,000 FHA-backed loans when over half did not qualify for the program. This suit is the third allegation levied against Wells Fargo in 2012. In October 2012, Wells Fargo was sued by U.S. Federal Attorney Preet Bharara over questionable mortgage deals. In April 2013, Wells Fargo settled a suit with 24,000 Florida homeowners alongside insurer QBE, in which they were accused of inflating premiums on forced-place insurance. In May 2013, Wells Fargo paid $203 million to settle class action litigation accusing the bank of imposing excessive overdraft fees on checking account customers. Also in May, the New York Attorney General, Eric Scheiderman, announced a lawsuit against Wells Fargo over alleged violations of the National Mortgage Settlement, a $25 billion deal struck between 49 state attorneys and the 5 largest mortgage servicers in the U.S. Scheiderman claimed Wells Fargo had violated rules over giving fair and timely serving. Tax avoidance and lobbying. In December 2011, the non-partisan organization Public Campaign criticized Wells Fargo for spending $11 million on lobbying and not paying any taxes during 2008 €10, instead getting $681 million in tax rebates, despite making a profit of $49 billion, laying off 6,385 workers since 2008, and increasing executive pay by 180% to $49.8 million in 2010 for its top 5 executives. As of 2013, however, at a marginal tax rate of 32% of its income, Wells Fargo is the single largest payer of corporation tax in the U.S. Prison industry investment. The George Group, Inc., a multinational provider of for-profit private prisons, received investments made by Wells Fargo mutual funds on behalf of clients, not investments made by Wells Fargo and Company, according to company statements. By March 2012, its stake had grown to more than 4.4 million shares worth $86.7 million. As of November 2012, the latest SEC filings reveal that Wells Fargo has divested 33% of its dispositive holdings of GEO stock, which reduces Wells Fargo's holdings to 4.98% of GEO Group's common stock. By reducing its holdings to less than 5%, Wells Fargo will no longer be required to disclose some financial dealings with GEO. Notable buildings. 1 Wells Fargo Center in Charlotte, North Carolina, Wells Fargo Building in Davenport, Iowa, Wells Fargo Center in Denver, Colorado, Wells Fargo Center in Jacksonville, Florida, Wells Fargo Center in Los Angeles, California, Wells Fargo Center in Minneapolis, Minnesota, Wells Fargo Center in Portland, Oregon, Wells Fargo Center in Sacramento, California, Wells Fargo Center in Salt Lake City, Utah, Wells Fargo Center in Seattle, Washington, Wells Fargo Place in St. Paul, Minnesota, Wells Fargo Plaza in El Paso, Texas, Wells Fargo Plaza in Houston, Texas, Wells Fargo Plaza in Phoenix, Arizona, Wells Fargo Tower in Birmingham, Alabama, Wells Fargo Tower. In Colorado Springs, Colorado, Duke Energy Center in Charlotte, North Carolina. Wells Fargo owns and occupies space in the building. See also: Comparison of online brokerages, List of Wells Fargo directors, List of Wells Fargo presidents, Wells Fargo Arena, Wells Fargo Center. Notes. References. Frequently asked questions. Wells Fargo history. Retrieved October 26, 2005. Is there a way to look up relatives who may have worked as stagecoach drivers for Wells Fargo? Wells Fargo history. Retrieved October 26, 2005. Mater, Julie. Merger means a bigger bank but uncertainty for employees. Cupertino Courier. Retrieved October 26, 2005. Siegel, Dave. Both CB Bank shares Ronald Midgeter and Central Pacific's Clint Arnoldus have been through bruising bank battles before. Honolulu Star Bulletin. Retrieved October 26, 2005. Spaldi, Aldo. Wells Fargo learned hard way about deals. Denver Business Journal. Retrieved October 26, 2005. Baker, David R. When hostile takeovers backfire. San Francisco Chronicle. Retrieved October 26, 2005. In July 2007, Wells Fargo Insurance Services Incorporated was ranked 5th in Business Insurance's world's largest brokers list. Wells Fargo buying Placer Sierra Bank's location equals Sacramento, CA. January 11, 2007. Retrieved June 12, 2010. Said, Carolyn. Wells Fargo buys bank/Greater Bay has 41 branches in the Bay Area. San Francisco Chronicle. Retrieved June 12, 2010. External links, official website.